Take a look at where we're travelling stateside for all the action. Larry Shover from D. Alexander Capital joining us now. Larry, terrific to talk to you again. So we also had a bit of data there as well, with the jolts coming in better than expected, the job openings. And of course, then we also have to look at CPI on Friday. We'll get to that in a moment. But how did you assess that session we saw on Wall Street at just finished?
Yeah, I mean, it was kind of a boring day, narrow price action. But on the other hand, to see the way the stock market has bounced back over the last 5 days, not a whole lot of news to move it one way or the other, except perhaps easing concerns over the Omicron variant and the vaccine efficiency and stuff like that. But yeah, it was good to see.
All right, so I know you've got your eye on the 10-year yield at this point. I mentioned the CPI figure coming Friday. What's your expectation just as far as that, and what's likely to happen on the 10?
Yeah, well, right now, if you look at the Treasury curve, they're building in 3 rate hikes for next year. And that's something that a month ago was not true. So if we see a CPI print that's even near consensus, and I think it's going to come to fruition, and I think we'll continue to see weakness in the front end, and we'll see the long end appeal to inflation, reflation, growth ambitions, etc.
All right, and also into that, of course, we talk about inflation, energy, a key component just as far as how that's likely to affect the economy, spending power. How are you seeing that travel at the moment? And of course, I guess OPEC is considering what future demand will be, and still some great uncertainty there because we're not sure of the full effect that Omicron will have.
Yeah, it's really a mixed bag, as it were. And, we've seen it, a lot of volatility in oil for sure. And, we're wondering, is there going to be a real meeting with Iran on Thursday? I think most people are pretty discouraged about that. We have to keep in mind that OPEC, they did produce 385,000 barrels a day in November, but that could waver. They could waver on that. We don't really know the complete impact of Omicron variant on the supply-demand balance. And so the market today, at least today, we had a pretty bearish EIA report, but the market didn't really care about it. And I think right now we're in a very narrow but volatile trading range until we get more explanations on some of these, higher level bullet points.
What's likely to happen just as far as that release of that strategic reserve that President Biden enacted a couple of weeks back, which didn't really seem to have much an effect because it was fairly small, wasn't it?
No. And, there is historical precedent for the Strategic Petroleum Reserve announcement to be canceled. It's happened before, and that's something the market thinks about. But even though the amount that he announced with other countries combined, you're talking about maybe $1 on the price of oil, $1 a barrel. And I think it was priced in well before that. But then OPEC bounced back and said, well, perhaps we'll just not produce as much as we said to offset that. So I think he just called him at his own game. And at the end of the day, it just really didn't work.
Larry, no doubt you have your attention turned now to 2022. It's just around the corner. How are you looking at the moment, I guess, where the Fed is sitting, that inflation picture, and continued uncertainty over COVID?
Yeah, there's always risks. The risks that we don't see are the worst ones, obviously. But, I continue to think that, supply side inflation will it go too far and too fast and beget a policy error by the Fed and other central banks around the world? And even though our economic indicators are doing well, the misery indices underneath it all, like the participation rate, as an example, it's still at a very, very dour level. We have midterms coming up next year. Gridlock. This is the first year that we're going to start off in the U.S. without any kind of fiscal support, and the first time in, I think, 2 years. And will energy end up being a tax on consumption, especially for the most vulnerable? Just some of the risks that are out there. I think we're seeing that play out in the price of the dollar, also in bond rates.
Yeah, so just as far as that strength of the US dollar, are you expecting that to continue?
I'm sorry, do I expect the yield to continue?
The US dollar.
Yeah, no, I think, it's amazing. There's so much momentum built into the dollar right now, and to see the way it's taken off in the second half, I still think that will continue for a while. I mean, it's, we're moving away from the zero bound, moving far away from the ECB and the Bank of Japan. I do think, at least for the first half of 2022, they'll still carry that momentum, even though so much of that is built in.
Larry, great to get your view as always. Thanks for joining us from D. Alexander Capital.
Thank you.